Right, welcome everyone to I called it market analysis, but before we do that, I want to just maybe we just refresh and check out some few things. So basically, I don't know why other people are not here for now. Basically, we do top-down analysis. Yeah, we do top-down analysis before we take, charts. Then we'll now begin to find out what the high time frame is doing, and then to what we should be looking out at the lower time frame. But I've also discovered that um, the higher time frame is very powerful, and if you can actually stick to the higher time frame, you have less burden. So I love using the bullish market, for instance. We have a move like this. Please pay attention to everything I'll be teaching, because I'll still show you in the chart what's happening. If we have a move like this and price break, I've said it again and again, the first place to look for your first entry is here, not here, because this is already a resistance that was broken. So price will come here to give you a higher high. So we have this as the first leg of our BMS. This becomes the second leg of the BMS. Then this first entry becomes that inducement, because now we're no longer dealing with we're now dealing with advanced market structure. So this is what the play is always all about. And when price is coming, we expect price to come to maybe this level, and we just so this is the move that price always make, always. So you can catch the first inducement up before you come down to start looking out for whatever you want to look out for here, whether it's fair value gap, order block, all of that, all that stories, or you want to look out for maybe a lower time frame break if you choose that. But these days I've not really been playing stuff like this. What I just simply do is to know what the high time frame is saying, look out for that level where price is coming, have my limit there, and give some space for stop loss to breathe, then profit at the high. So anytime you see this kind of first formation, your first entry should be here. Like I was waiting for crash 300, is the same thing. We missed out crash 300 because when price came here, price really didn't tap that first entry, and price kept running away. So we had all of this. We had this. So when price came here, this is what price did. Price came to this zone, or like this. Okay, let me do it like this. Came here, and price broke. So instead of waiting for price here, the first place to look out for price is this zone. That's the first place. And in this place, you are still going to look for the same thing. What's that same thing? Sweep of liquidity and a move to the direction. So price will have to come and take out the liquidity that is built around this place. So many a times price will create one candle and a wick to this zone. How do I explain this? Let me try. So price can create a candle at your zone. I'm talking of this zone now. And price will create this kind of wick around this zone after price has given you that break. So this becomes your internal liquidity or inducement. So when the next candle is coming, this is what you expect price to do. Price should take out that candle that was created, because that candle now becomes your entry. And then price will rally up. Something like this. So sometimes this can be, it really doesn't matter the candle. It can be either a bearish candle or a bullish candle. It really doesn't matter. But price will always almost do this. So remember, I have stated it before, until this high is taken out, this place is not valid for entry. So instead of waiting for this high to be taken out, you can join and take out this high. Please pay attention. You can join, take out this high, because you fully know that price will come back here. So instead of waiting for all of this push before price will come back here to get an entry, you are already on this trade. Give me 1 minute. All right. So what I'm explaining right now, I'm going to take you let me take you to crash 300 first. I wouldn't want to take out this. So let me see if I can open another page. Please just stay with me. Understand this concept. This is why we miss most of the trades that we intend to take. We wait for it for hours and then price is gone. Let me bring this close. Okay, so let me show you what I'm explaining. Crash 900. I'm going to take you from, is my screen still responding? Okay. All right. So by higher time frame structure, okay, what is this? This is the last low. Please follow me carefully. Is Annie on the call now? Yeah, Annie, welcome. Mr. Tony, welcome. So you just pay attention when it's time to ask question. I'll give you a privilege to do that. So this was the last low. So it means that this is the current high that price should necessarily take away, because these are high, low, higher high. So we have this valid high here. Then we know that all of this was an inducement that price was coming to capture. And on weekly or monthly, there is a kind of, I think a fair value gap here. Yeah, maybe. I don't know. So price came into your zone. As price comes into your zone, this is 4 hours. You want to go to either a 1 hour or 30 minutes or whatever. So I'll want to go to a 4 hours, then I'll go to 30 minutes. Now we have already established that we are bullish. We're going to be, any entry we get here, we're going to hold it to this zone. This zone, that's where we're going to. So let's check it 4 hours. So 4 hours came into that picture. I'm going to show you exactly what I just explained. Now this is the zone where 4 hours came into. Remember I said that you always want to see price giving you um a break of two structural zones like this. One change of character, then a break in market structure. That's what I want to see. So price is there. Let me take this out. This is the concept I'm trying to explain. This concept, when price comes here. So this is price at your zone. If you go to a 1 hour, you are going to find price gave you that break of two zones. Make this a little bit lighter. Can you clearly see the two zones? Price gave you the break of these two zones. This was completely valid now. Broke here, broke here, broke here. So this zone is a two structural break. But let's go to 4 hours. Let me show you what I just explained. So now this is my valid break in market structure. Also remember that we use the body of the candle. This body of the candle, this candle is what gave us this valid break in market structure. BMS. Beautiful. If you are still following me, please drop a 1-1 in the chat. I want to be sure you are following me. Just drop a 1-1 in the chat if you are following me. I'm going to the chat. Let me see. You are following me. Drop a 1-1, please. All right. Okay. All right. Beautiful. All right. So let's go. All right. It's okay. I just needed confirmation. Let's continue so that we don't get distracted. Now, price comes into that zone. I've always told you the story is in the body of the candle. You see, price came there. You see all these wicks. That's rejection. That really is. Yeah. You might later want to read about pin bars and all of that. I use them very well, but this is the concept I'm showing you now. Once price break, look at this bullish momentum. 1, 2, 3 broke here. Look at what price did. Price created this candle after breaking. Created this candle. This was the place price broke. Look at this candle was a wick. That was the inducement. So this was your entry. You can see how the price came to take out. This is internal liquidity. Remember that we always want to see price sweep a low and break above. So when price comes here, price will also create this. Price will create a wick, come take it out. Is the same concept. Price takes out that wick at that zone where price give you that break of structure. This was the break. And this was the sweep. Complete market cycle break. Now you are not expecting price to come here. Price will not come here until price take out the high. That's when price should come back here. So the more you are waiting for price here, price has already played and left. This is what I've been studying all this way. So this would have necessarily be your entry. This week was a good place for entry. Now, where will the stop loss be? Most at times, what I do, I put the stop loss on this candle, the wick of this candle or the body. This is your entry. This is inducement. This is liquidity. That's the entry. That's where I missed C900. I was waiting for price to come back to this fair value gap. Price left. Meanwhile, price already played this. I didn't see it on time, but that is the entry I'm teaching you. Now you are already in. Look at the first thing price did. Price gave to this high. That's 1 to 6 already to this high. When price came back, I'll show you the same thing. So price came back to this fair value gap and all of that. Now that price is back, you want to see that break. Let's see if we can get a 2 hours. Let's see. Okay, I think 2 hours should give us what I'm talking about. Okay, look at it. Price came here. High, low. Price broke here. Cleanly. The same break in market structure. BMS. Now, what are you looking at? The candle that broke that structure was this candle. Is it clear enough? I should zoom it out. Okay, let me zoom in. This is the candle that broke the structure. Did you see this candle? Price created this and created this. Look at how price took these two candles out and gave that entry, tapping into this candle here. So this would have been another signal for a buy. Price coming to fill this fair value gap, tapped into this, but took out these wicks. If you go to, let's check 1 hour. Okay, beautiful. All right, I think it was 1 hour. This was the candle, so I was waiting for this. Yes, it was 1 hour. This was the candle. Though I went down so much, I would have just played a sweep of this candle and put my stop loss at this candle that broke the high. So you see, price didn't take out this candle that broke the high, but price actually came into this, leaving this fair value gap. So I was anticipating that, all right, maybe price will still come back here, you know, after breaking, tap into this. So this was my entry, but it was missed. I think I sent this to the group. I did. Okay, I sent this to the group. That was my entry, but price didn't fill me in. But you can see how clearly on 4 hours price filled in that first entry. It was so clear. Took this out. The candle that broke this high, stop loss at the wick of it, and that would have been the entry. Now, if you are waiting for, just like we're waiting for price to come back here, price may likely not come here now. Or if price wants to come, price can do something like this: one leg, second leg, go up higher, come back for this leg. But you'll be shocked, price can keep moving like this until price take out this high. Then this zone becomes valid. If price takes out this high, then this zone will become valid for price to come back to. But all this move, you have already missed it. All this move. Now let me take you to crash 1000. I'm still going to take you to EU and GU and possibly gold. So let's see 1000 first. It's the same concept, right? So I actually was looking to buy, but later I changed my bias because by top-down analysis, we are bearish. Price took out this low. And the high that sponsored this low was this high. And this was the low. So these are our current postures, our current zone. So why I was looking to sell was that price took out this inducement. This was an inducement here. It was Mr. Ezra that, help us understand this. This was an inducement. Before, I just take this as maybe a break of structure and then you want to start buying. But this was an inducement. So price took it out and price came all the way to this zone. I'll tell you where exactly price came into. Price came back to this zone, tapped into this zone. But let's finish what I want to explain first. Now, I was looking at price coming to this zone. Was it here or here? I was looking at price coming here, I think on 4 hours. Yeah, let me take out this. This is what I was looking at. I'll explain to us why. So I was looking at price coming here. My entry was there. You can see that last candle there was without wick. This last candle here was without wick. So it was a fair value gap, an imbalanced candle rather. So I knew if price come here, want to sell because this was clean. Price took out all of this inducement here, and we need to start going lower. I see some people still buying. Yeah, it's fine if you have capacity to buy, but I already see a break this way. So when price came in here, I went to, was it 2 hours or 30 minutes? All right, let me show you. Let's check 1 hour. Okay, I think I've got it. Beautiful. So price came in there 1 hour. Same story all the time. Gave you a clear break. Is the break, is it visible? Let me know. Can you all see the break? Somebody should just let me know. So now we have the break. Okay, all right. Thank you, sir. Boss, welcome, sir. So why did price have to create this week? Because this was inducement. Price created inducement and make move to go and take it away. Though this was not my entry was here. And that takes me to the next thing I want to teach. But price came in. So even if you had this entry on the inducement, because you are very sure, now your stop loss should be the candle that broke the low of it. Would have been on this trade. This was actually my entry, but you see, sometimes one is not. I got into this trade. I think I dropped it in the group. I had stop loss hits like this last week, massive. I was bleeding. So immediately I recovered. I ran away. I think I tipped it from this place 1 to 6. That was not bad. I tipped it from here 1 to 6. Okay. So that was the entry. So if you are going to wait and say, okay, maybe price will break here and come back here, and you now stay here and stay for ages, you just be watching at the candles printing. And when price will finally come there is this kind of mindset you have. How about if price take it out? Yeah. How about if price takes it out? Because there are liquidities everywhere on this trade. Like I said in the chart I dropped, there are liquidities everywhere. But price should go and capture the liquidity that is in line with the higher time frame structure. So that's equal highs there or triple highs everywhere. See triple lows here. But this is the liquidity I'm interested in. You can see all of these. 1 touch, 2 touch, 3 touch. So these are liquidities. I'm interested in this liquidity that is in line with the trend. Okay, so price came into that zone and gave us that beautiful entry. Like, that was a beautiful. So let's see where price is now. Let's see. I left at 1 to 6. Let's see. So if this was it, stop loss at this candle, or if you want to be conservative, stop loss at the high. So where price currently is, this is a 1 to 10. That's crazy. This is enough for the week. This is enough for the week. And if you're like people like who is this guy now? Okay, let me not say anything. Mr. Tony, welcome. Lucia, Femi, everybody, welcome. So you want to see price do this thing again and again. Once price come to that zone, the first point of interest is where price broke structure. Watch out for a sweep of maybe a candle or a wick or something, and then your entry there. So most times I love using the 4 hours, because the 4 hours will just give you will just make you be at peace. I love using the 4 hours. So on 4 hours, all right, let me say this too. Let me teach this. Okay, let me explain.
Hello, coach. Please, 4 hours for the direction or for the entry.
I use 4 hours for both direction and entry.
All right, sir.
Yeah, so what I do now, or trading, there's no, what I call it, hard and fast rule. Yeah. You just keep evolving, you just keep getting better. You just keep getting better. You keep learning new concepts as you study. You keep understanding this thing. So this is what Mr. Fortman taught me because I'm in his class. He's my mentor also. He said in trading we have candles and we have wicks. The candle is the story. The wick is the damage. So the wick is just there basically to do damage. That's its significance. So most times you see something like this, price will just come, take this out. The price just came to take out all the previous buyers that were here. That's what price came for, nothing more. They are not interested in any serious information there. They just want to take these guys out, which is our sweep of liquidity, which I've always taught in the smart traders network. All right, so price comes, takes this out, and price either give you closing above by body, break of structure on lower time frame, or just different scenarios. Now what he said is that the body, that's where the volume is, the body. So I mark the body, and then I want to see what price we do there. So most times if I'm trading, I just switch to the line chart, because the line chart will always give me a clearer picture of where price came. So according to Mr. Fortman, he said we have the V-shaped key level and we have the A-shaped key level. So if I'm going to buy, I want to always see that V-shaped key level. So if I turn on my line chart, I want to see that V-shaped key level. And if I want to sell, I want to see price come to that A-shaped key level, because that is where the information is. So if I'm going to sell, I want to see price come here. We sell. And when price comes here, price is definitely going to take out a wick here. A wick. Same concept. Price will go for that wick and take it out. So this wick will serve as my inducement, while here will be my entry. And if I'm going to buy, I want to see price giving this V-shaped key level. Now when the V-shape or the A-shape is disrespected, it becomes an entry, like what I just explained. Okay, it becomes an entry. If your A-shape is disrespected, it becomes an entry. If your V-shape is disrespected, it becomes an entry too. If you understand what I just said, put it in the chat. Let me see. Put it in English on your local language. Let me see. Everybody, I'm waiting. Support turn resistance. All right. And I'm going to show you how I use this in almost all the trades that I traded this weekend. Same concept. I'm waiting for you guys. I'm waiting. Okay, you are not sure. All right, no worry, you understand. Yeah, it's just the chart you are seeing on the screen. So like what I said, we have okay. So we have an A-shaped key level. And we have V-shaped key level. violation of A or V shape is used for entry when there lies a liquidity. This is what I said. So this is an A-shaped key level. So if price is going to sell, price will have to come back here to sell. And this is V-shaped key level. If price will buy, I won't take this one down. Okay. Price will buy. Price will come back here and buy. Okay, so just concentrate. Don't worry. Don't write again. So this is what I'm saying. If we have this V shape, price goes up, price is definitely going to come back here to this key level for a buy. Now, what do we have here? We have an A-shaped key level here, disrespected, because price broke it. So price will come back to it. That's what I mean. Then we want to see price create that liquidity here that price we have to take. Price creates some form of liquidity here that price will take. You get it now? So price breaks this shape that is here. Price creates this, break this, then price comes back to this shape that was violated here, and price give it that entry. That's what I'm saying. So if price is coming to do this, we want to see price coming to take out an inducement somewhere around. Price coming to take out an inducement. Let me take you to the chart. Maybe you will understand better. Let's go back to this crash 1000. That's what I used to get my entry. First, I already know that by structure, disregard whatever is here. Okay? That by structure we're bullish. So price was coming here. Lows. Let's come to these lows. This was a high. This was a low. So I turn this to my line chart. Let me turn this to my line chart. Because if you turn into a line chart, the line chart will give you your A shape and V shape. Price came here and bought. So first, let's look at when price bought here. Price bought, broke here, broke here. Look at price at least start here, went higher. This became inducement. The next place price came to was here, because this was the violation. This was the V-shaped key level that was violated. Price came here, and price had to take out this inducement that was here. So look at it. Claim. Price came here, gave you break of structure here, broke here, broke here. So price created all of this wick as inducement to come and tap in here. So if you had want to enter this, you enter here on this inducement, on this this A-shaped key level, and your stop loss will be on this candle that broke structure, the lows of it. That would have been an entry. All right, let's leave this. Price rallied up after buying that, took all of this. Now that price came here to give us this high, price actually took out this high. Price took it out. Let me zoom it for you so that you see. If you zoom it, you see that price took out that high. You see price took it out, right? price took it out clearly. So since price has taken out that high, you know price is going to start retracing. So from this retracement, let me show you, put it on the line chart. Let me show you what you can see from here. Price gave this break, broke a V shape, and broke this V shape. So first, this was where you'll be looking for your entry. But price must give inducement here before price came here, because this is the one I played. So let's see what happened here. See, price came in here and price played this zone. This was this zone. Price look at this candle actually. So even if you had played this as your inducement, this was your inducement. Even if you had played this entry, because there was something here on lower time frame that price came to play. So even if you had played this, remember what I said, your stop loss should be on that candle. So let's say you had this entry, your stop loss is on this candle that took out liquidity, the wick of it. You see that clearly you were not taken out of the trade, sent to back. You were not taken out. Let me lighten this place. Okay. I just want to use color that we can easily see through. You see, you were not taken out of that trade. So that would have been your first entry. You'd have had all of this, which was a 1 to 3. This was a 1 to 3. Beautiful 1 to 3. All right, now that price is returning, let's go back to the low. This is the low and this is the high. So where do you want to play? This V-shaped key level, that's your entry. So this V-shaped key level is your entry. What I did was just to set my entry here. Stop loss a little below the wick. Bring it back to the candle. Stop loss a little below the wick. So I didn't even need to go to a lower time frame. That was just the entry. You see how that price came into that V-shaped key level, got activated, and price started flying away. So if you didn't get this, what would you have done? You go to a lower time frame. I want to see that break and entry. So let's see, maybe 30 minutes, or let's see if there was any candle that gave us that play. So permit me to draw this down. All right, let's see. Same thing I just taught you. What can you see? Price came in today. Let me remove this and closed above here. So this is your break of structure. Look at that candle. Look at that wick. So that wick is your inducement, your liquidity, internal range liquidity to be taken out. So that wick is your entry. So you missed the down one. This was the next entry. Stop loss at the candle that broke structure. You want to be conservative, you can still put it here, but this was fine. The candle that broke structure, send this to the back. Let's see.
Hello, coach. Does it mean that we don't need to wait for two structural levels to be broken?
You want to wait, fine, but even if you still wait, it's the same thing. If price break here,
the entry at the up there. Yes, exactly.
Yes, price still broke here. Price still gave you that inducement, swept it, another entry was there. So another entry was there, is the same thing. But if you are already sure, if you are playing, and that's why I said everything I'm doing is higher time frame. If the higher time frame has already confirmed that, all right, this was my V-shape key level, and price comes here and you see this, why wait for this? Assuming you miss this, yeah, the call is being recorded. Assuming you miss this, you already know the principle I'm teaching you. Price break this, then you have that entry there. It's as simple as that. But already this was my entry, and this entry that is here was Mr. Ezra's entry. This entry that is here is on the call. He can confirm it. This was his entry.
That man will be from
I used to wonder how he gets those sniper entry, but this is just it.
That man is a
Price comes. Sorry.
That man is a cheat. He's a cheat.
So price came, gave us that entry. You can clearly see that entry. Now, price started running. Let me show you the sell I took and how I took that sell. Remember I said if a V shape is disrespected, it becomes an entry. If an A shape is disrespected, it becomes an entry. So let me show you. Coming here, everybody was looking to sell, to buy, and take the high, but I was looking to sell. What did I do? I took my what's it called? My chart to the line chart. Let me zoom it so that you see clearly what I did. What can you find? This was a V shape. This is a V shape that was disrespected. This is a V shape here. So I saw this V shape. I knew that's where price is coming to. So I had my entry on that V shape. I had my entry there. I didn't wait for price to break. I didn't wait. And I'll still show you how I got the second entry. I had this entry here. Stop loss at the high with few pips. Let's open the candle now. So this was the entry. Meanwhile, there was an A shape here. Look at this A shape. This A shape was here. Why didn't I play the A shape? Was it A shape? No, this V shape was here, sorry. Why didn't I play this V shape? Because this shape has been disrespected. So if this V shape is disrespected, this A shape, I knew the V shape was going to hold. So I had this entry here. So look at the candles. You see, price didn't come to this zone. Price played here. And that was my first entry. Assuming you missed this entry, now let's go to a lower time frame. How would you have taken this on a lower time frame? It's obvious, it's there. It's obvious. Very, very obvious. So price has come to your zone. What can you clearly see here? That break is there. The breakout structure validates that we are going low, right? So we have this. When we had this, now you can clearly see you have your inducement here. But I didn't play this inducement. What I did was I just brought it back to line chart. What can you find here? A V shape was disrespected here. This V shape has been disrespected. So let me remove this. You missed the first entry. This V shape was disrespected. So that was my entry at that V shape. I can still look for the chart and show you it's there. It's there. So I had my entry here. The inducement was already there, telling me that I'm in the right direction. So candle. This was the candle that broke this structure. So you can have your stop loss at the wick of the candle, or you want to be conservative at the high. Okay, so this was my entry here. Stop loss at this low, and boom, that was it. I think I should look for this. Let me show us. Let me see if I can look for it. I need to show us so that if you understand what I'm explaining, can you just let me know? Is it too difficult? If you are copying what I'm explaining, it's clear, right?
Yes, boss. For me, it's clear.
Better be clear. It's simple. I'm hoping I screenshotted it. I'm hoping I did. Okay, maybe I didn't. I can't remember. Yeah, Mr. Ezra, God bless you. All right, so let's see this. Okay, this was my GU. I'll come to GU. Sorry, that was my EU. Okay, see this, see this, see this. I already sent these charts to the group, so they are there. So this is the crash 1000. You can see that was the entry there. Price just came, pushed me up, tapped, and price has been dropping since then. So all this drop you see, though I left when I just got 1 to 6 just to recover, and then I left, but Just imagine I'd held this. Come on, guy. This is a 1 to 18. Crazy. La 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 la. This is a 1 to 18. Crazy. Okay, let me leave that. I don't want to blow my trumpet. Now, we have this. This is liquidity piping here for me. Imagination won't kill me, bros. Honestly. But Kai, it really pained me. I left so early. It really pained me. I left around this zone. Yeah, it really pained me. But all the same, we move. So let's look at EU. Let me show us this first. I sent this to, I think I sent it to the group also. Or Mr. Tony, is this still on the call? Yeah, Mr. Tony is still on the call. I sent this to him. Okay. Here is my resources. All right. So I had this. I had this for EU. Please, I had this for EU. We have been trying to buy. We bought all of these, and I saw price coming to this fair value gap on the 4 hours. So look at it. 4 hours. Okay. We actually bought here. We bought all of this. I gave this. We bought this too. Why did I even give out this? Look at it. Same concept. Look at this. Was a V shape, or sorry, an A shape that was disrespected. This was an A shape that was disrespected. So I knew price was coming to tap here and will continue. So if you bring it back to the candle, you can see how that price came, tapped into this shape, and this is what I was expecting price to do, and price did. Take out that as my inducement. Do you see how crazy price took it out? Very small, but price actually took it out. So if you had your entry there on that inducement, that would have been sniper. My God. You can also see this inducement was there also. So even if you had your entry here and stop loss, maybe at this candle, you'd have been taken out. But this was the entry. Stop loss around 1 or 2 hours, whatever. All this is gone. So on 4 hours, I saw this fair value gap. After this choppiness, this was the fair value gap I was looking at. That you can see I marked here. That was the fair value gap. Price came into that place and broke below. So price came in, broke below. When price broke below, it's simple. You now want to start looking at where is price coming to. Look at the shape. This place was disrespected. This was a V shape that got disrespected. So price is coming back here. Now you need to come back to the candle and start looking at what's the closest inducement to it. This inducement was here, all right, for entry, and this inducement was here. It was very clear on the 1 hour. Okay. All right, this was the 1 hour. No, 30 minutes. Was there 1 hour? Okay, it was 15 minutes and 30 minutes I marked. All right, this was the 30 minutes. So I came to the 30 minutes and I saw this. So let me remove this, please. You see, a complete market structure now. Price gave it that break. You can see the clean inducement. And this was what I picked as my inducement, this. Because this is 1, 2, C should come and take out B. So that was the entry. And price came in there, though not in time. Price came in around 6 p.m. So I was not in on this trade, but price actually came. So stop loss maybe here, or we want to be conservative. Stop loss at that high. This is too dark. I don't know. I don't even know the color to use. Ah, okay. Okay, yeah, let me just use something like this. So price came into that zone. You can clearly see how I marked it out. This was it on 30 minutes. That if price come back here, we'll sell from here because of this break. Mr. Tony, are you there? I sent you this, right? Are you there? Can you confirm? Yeah, maybe he's not there. All right. So price actually came in and gave us that push. And where are my take profits? This low. So this is a 1 to 2 or 1 to 3. And that will give us a 3.8. And if price keep pushing, we have all of this low. Remember, we have another key level here. Okay, we have a key level here. Though you may not clearly see, but there's a key level here. So I'll want to take my profit before price comes to this key level. Let me check for 2 hours. Maybe 2 hours might spot it. Yeah, not so clear. Here's noisy. My background is noisy. All right, no problem. No problem. Just wanted to be sure I sent it to you. So that there's a key level there on 4 hours. All right. If you zoom it very well, you see it. It's there. It's not. It was disrespected. So anything can happen here. Though overall, I'm still bearish. Okay. But because of this break that you can see here, I'll take this as inducement. That's what I take this. I take this as inducement. So I take this as inducement. Okay. Inducement was swept. Price can keep going lower. So I want to see price either come to this zone, consider fair value gap on daily. I take my profit before then, or price comes here. There is, I think there should be a 4 hours V shape here. Yeah, these are the zones I'll be looking at to see what price will be doing. So either this zone or this zone, whichever one. I want to see price keep pushing down. All right, same thing. So let me give you opportunity to ask questions first. Maybe 1-2 questions, and then I'll save the recording. I'll save the recording so that we can now do market analysis. So you have question, go ahead. Drop it. So while I summarize, basically what I'm saying is that if we are bullish, want to see price consistently giving us these highs, consistently giving us these highs, consistently. Price consistently giving us these highs, keep going and keep pushing higher if we are bullish. And if we are bearish, want to see price give us something that is worth our attention. Price creates this, maybe create this, takes it out, tap into that zone, and then we keep pushing. If price create this, maybe price creates this for us, take it out, tap into this zone. Yeah, something like this. So anytime you see price give you this break, start looking for a liquidity to be taken, and then you can get entry there. Or price comes, take this out, you start looking for liquidity to be taken, you have your entry there. So when price create this or somewhere around here, take it out. This V shape was disrespected, V shape disrespected, price comes back to get in. And if price is going to buy from here, price can create this, maybe come here, to the A, the V shape that is here, and price will, break higher. Yeah, this movement of price, something like this. Okay, since there's no question, let me believe that it's understood.